Here is a recent trade which I took that gave me over 10% gain, helping my portfolio. So in this video, I'm going to be showing you guys how to actually trade like this using this particular strategy, using candlestick patterns such as the bullish engulfing, the bearish engulfing candlestick patterns, and the multiple weak rejection candlestick patterns that are going to be making you guys profitable and take trades just like this one you can see. I want you guys to be patient, all right? So right now we're going to be looking at the bullish engulfing candlestick pattern. It's a candlestick pattern that indicates momentum, all right? So for the bullish engulfing candlestick pattern, the blue candle is times 2 the size of the red candle, all right? So right now what we're going to be looking at, the charts, and then we're going to be able to like spot out the bullish engulfing candle patterns that indicate trade word reversal, okay? But this time around we are going to be looking at it from the support level, okay? We're going to be looking at it from the support level, and then we're going to be placing trades live, all right? So right now we have been able to like spot out the support level because this is a double bottom, guys. It's a double bottom. So, and if I zoom in very well, you're going to be seeing that bullish engulfing and the hammer candlestick pattern right there, all right? With that in mind, what we do, we are going to be taking our trades upon that confirmation, guys, because these are powerful candlestick pattern that indicates what momentum in the market, all right? That buyers are going to be what in place of this market, and they're going to drive this market to the upside. So place your trades at that point, and you see the market is just going to play it out just like that because it's a high probability candlestick pattern that indicates momentum, okay, in the market. If you learn to use this candlestick pattern, you're going to increase your win rate, guys. You're going to increase your win. Let's look at another example of the bullish engulfing candlestick pattern. Here we have a naked chart. Try to spot out the bullish engulfing candlestick pattern. All right, so here we have it. You can see it there clearly well. You have that the blue candle is like times 2 the size of the of the black candle, and then you place your trade, okay, guys? Now, guys, we're going to be looking at the bearish engulfing candlestick pattern. It's another powerful candlestick pattern, but in this particular case, we have the red candle being completely engulfed by the green candle, all right? And we find this most likely on the resistance level, okay? Right now, we have the resistance level, and we have an engulfing candlestick pattern which indicates what momentum and sellers are in control of the market. So what happens now is you place your trade, and you see that you actually won the trade because it's a high probability candlestick pattern. Now, guys, we're going to be looking at the hammer candlestick pattern. It's a powerful candlestick pattern that it can be found at the resistance level or the support level. The hammer candlestick pattern is divided into the inverted hammer and the hammer. These are powerful candlestick pattern that when found at the resistance level indicates what strong momentum for sales. So right now we're going to be looking at an example of the hammer candlestick pattern on the trade which I took on the euro US dollar. All right, look at the area which I circled there. We have our inverted hammer candlestick pattern. It indicates strong momentum in the market, all right? We have it at our supply zone, okay? We have it at our supply zone, okay? So right now what we're going to do is we're just going to mark that area out, okay? And we're going to zoom in so that we show you how to actually execute your trade using this particular powerful candlestick pattern which I'm teaching you guys, all right? Keep following. Place your trade just right there, and your stop loss just slightly above that area, as you can clearly see. And I've been able to zoom in clearly well, and the trade actually worked very well, giving us a 1:4 risk to reward ratio. Now we're looking at the hammer candlestick pattern. It's a powerful candlestick pattern that I actually use at the support level to buy. So right now we're looking at a naked chart, okay? And we have the market being at our support level here. And we can clearly see the hammer candlestick pattern. Like I said, it's a very powerful candlestick pattern, all right? I'm just trying to mark out the support level, all right? So I've been able to mark it out now. I'm just going to adjust it, all right, so that it can clearly fit, all right? Looking at that area, that's our hammer candlestick pattern. It's a very powerful candlestick pattern. I don't play with it, guys. I don't play with it at all. All right. So right now you place your trades, okay, So for this particular setup, you're going to place your trade right there, and then your stop loss just slightly below, and you can just go for 1:3 risk to reward. All right, and it will play out perfectly well. You don't need to aim too high, guys, because that particular area where we set our targets is actually a key level where the market can quickly reverse from. All right, so guys, you see how this actually played. It played out nicely well. And another thing which I want to do here is I want to look at another powerful example which indicates how strong the hammer candlestick can be. That's another one, and this is another one, but we are going to be laying emphasis on this other one this way. All right, this second one, this is the one we're going to be laying emphasis on. Now we're just going to mark our level out. All right, this is our support level. All right, more like the demand zone for the smart money traders. All right, so you place your trade when the hammer candlestick is formed at the support level, and then you can target the next key level depending on the time frame which the hammer candlestick formed. If it's on the 4 hours, it's a high probability trade, and then you can actually target the next resistance, the next key resistance. All right, above, you can target that. This is really powerful. Now we're going to be looking at the multiple candlestick rejection. Okay, this multiple rejection candlestick pattern at the demand zone, you just see them like this. Okay, indicates what? Buy pressure. It shows the price is actually rejecting at that key level. So now what we're going to be doing is we're going to be looking at some examples of that. Okay, mind you, I don't have the replay button, okay, because if not I would have replayed this so that you actually get to understand it. All right, so right at this point you can see that we have multiple rejection candlestick on our 4 hours time frame, as you can clearly see. All right, so now you're just going to place your trade at that level where you have the multiple rejection candlestick pattern, because it has to be at what? At the support level, okay, for this multiple rejection candlestick to be what? To be valid. It has to be what? At the support level. You see, the moment that happened, guys, the multiple rejection candlestick happened, you could have just placed your trade at that level, guys, and you see the market kept pushing to the upside with great momentum, guys. This is the 4 hour time frame, as you can clearly see. The market actually respect this kind of candlestick pattern. All right, place your trade at that level, at that particular area, your stop loss just like 50 pips below, and then you can actually set your take profit at that support at the previous resistance, or you can be greedy, all right, and like aim for the higher, for the market to actually form some new highs because of the nature of the candlestick pattern formed below. We are going to be looking at another example of the multiple rejection candlestick pattern. Here we have the NAS 100 4 hours time frame chart, and here we have the 1 hour time frame chart, and then you can see that there's multiple rejection on the 1 hour time frame, and also there's multiple rejection on the 4 hours time frame. Then you place your trade and you make money. Previously, guys, we looked at the multiple rejection at the support level. Now we're going to be looking at the multiple rejection at the resistance zone. So at the resistance zone, whenever you see multiple rejection like this, it indicates what? Selling pressure, and you see price rejection. In the F4 indicates that you should sell the market, guys. You should sell at that point, guys, and you make money. Guys, please, if you like my videos, please endeavor to hit the like button and subscribe to this YouTube channel for more contents like this.